Hey everybody, today is June 22nd. Today I want to talk about the stock market. I want to talk about the recent volatility we had with fears of inflation and perhaps premature rise in interest rates from the Federal Reserve. And I want to talk about like why is the stock market recovering so quickly? Why is the market so resilient? And before we begin, please read this disclaimer. You can pause this video as you read it. So I've said in the past, we've talked about this many times that like there's been inflation fears for a long time, right? It's not like it's just suddenly coming out right now. And there's also been speculation whether the Federal Reserve is going to raise rates before 2023. Um, and I've said many times, like the Federal Reserve believes that what we're seeing in inflation is transitory, and you can make a whole argument whether it's transitory or not. But for now, I do think that the fact that we're seeing people come out and they want to enjoy life. They don't want to stay locked in their homes, right? More and more people are getting vaccinated. They're going out. They're spending money. Businesses are now sort of overwhelmed, right? And there's also been a shortage of supply of employees to really meet the demand. So not only supply, but also employees to meet demand. And so that's why we're seeing a bit of inflation because and the market just closed. So we're seeing a bit of inflation because a rise in prices because there's just too much demand but not enough supply to meet that demand. And so the Fed, they believe this is transitory, which is temporary. And I do agree with them to a certain extent. I do think that, of course, we've seen the Federal Reserve, the Treasury print a lot of money, trillions of dollars literally in the last year and a half, right, to save our economy from the pandemic. However, so that in the long term will cause prices to rise. It will cause inflation. But at the same time, we're seeing like even more increasing inflation, especially in like things like housing or even like gas prices, right? And I'm sure you've seen increase in prices in like groceries at the grocery store. But I think a large part of that is going to be temporary, and we're going to come back down and stabilize before going up higher in the long term, right? Because in the long term, printing money does cause inflation, but in the short term, with a lot of people going out and spending money, that's going to cause a short term spike in demand that supply may not be able to meet, right? So I think that's caused a lot of fears as to whether the Federal Reserve might raise interest rates early, or they might taper their bond buying program, which we talked about in the last video, and that caused the market to come down quite a bit, right? But here's what I want to say. I want to say that a lot of these it's not really something to fear. This is, to me, is a buying opportunity, right? I said in previous videos that in a healthy bull market, we want to see the price action pull back and touch these moving averages once in a while, right? The silver line is our short-term moving average, is 50-day moving average. The gold line is our mid-term moving average, the 100-day moving average, and our blue line over here is our 200-day moving average, which is the long-term moving average. Now let's look at the overall trend in the last 10 years, right? By the way, this is SPY, which is the ETF that tracks the S&P 500. And if you look at, let's just say, let's just randomly 2012 to 2015, right? Look at how we pulled back to the 100, our midterm moving average. It's like systematically, once in a while, every couple months we would pull back, right, and touch it. And then once in a while we would come down and touch the silver line, which is our short-term moving average. But it's healthy even to come down and touch the gold line. And these aren't like small pullbacks, right? These are over 5% pullbacks, maybe even 10% pullback, 5%. And then this one, which was the Ebola scare in 2014, right? This one plunged like nearly 10%, right? So in a healthy bull market, we want to, and even here, 2019, we had some pullbacks, right, of 10% or nearly 10%. And so we haven't had like a 10% pullback in a long time. Even our recent pullback in May wasn't even 10%, it was like even 5%, right? So even this is the worst correction we had this year in February to March. This was not even 10%, this is just over 5%. So we haven't had a 7 to 10% correction in a long time, which would bring us back down to the gold line, our 100-day moving average. And I just showed you in the last decade, we had many pullbacks. So I think that what I'm trying to say is that sometimes the market's going to come down and it's natural for it to correct and pull back to our moving averages and shake out the weak hands before continuing higher. And you're going to see the news, they're trying to make sense of it, and they're going to try to grab whatever narrative that they can find. And I think inflation is one of those easy ones to grab, right? But if you just look at the charts, you'll see that not only does this moving average show strong support, but the fact that we've been trending this Fibonacci line, right? And basically going from resistance into support. And the last time we found resistance was also at our previous Fibonacci resistance level over here. And we had two massive corrections. This is 10% and this is just below 10%, right? We went sideways on this line, and so right now we're seeing something similar, not as bad. Like, of course, this had more volatility than we do seeing now, right? This is barely 5%. So the fact that we're holding this and cultivating higher lows and higher highs, swinging between this range Fibonacci support level and flipping it from resistance to support is going to give us a stronger base to push up higher, right? So this pullback that we had recently to touch this 50-day, not only touch this and hold the 50-day, but also the bounce and hold the blue line. So people were surprised that yesterday we had such a strong move in the markets, right? Then the Dow Jones yesterday went up over 500 points, and now it's up. It closed just a couple minutes ago, up 68 points. So why did we have such a huge bounce, right? And we can just look and see, right? We're bouncing off, this is the S&P, back to SPY, which tracks the S&P. We're bouncing off the short-term levels that I talked about many times in my previous videos when I started making videos back in March, right? Systematic pullbacks, right? In a healthy bull market. So, VIX coming down, as we see in a bull market, it just strengthens the fact that we're in a bull market, that we're continuing higher. We want to see a slow bleed in the VIX as it continues to move down lower, right? The dollar short-term spike up, but starting to fade, especially these yields starting to fade as well. And that's all good. I said in my previous video that there was fear that inflation would hit, and that caused, sorry, I'm like, my throat's a little dry. That caused yields to rise early this year, which sparked a rotation into value stocks, into the Dow Jones. So the Dow Jones earlier this year was actually outperforming the NASDAQ, and NASDAQ was falling pretty hard. But I said in my last few videos that I believe that NASDAQ will lead again, and in a healthy bull market, in a strong bull market, the growth stocks are usually the ones that lead, right? And a lot of growth stocks are in tech stocks. And right now, we're forming this beautiful ascending triangle in the NASDAQ, which is about to break out, or is breaking out higher into new all-time highs. So new all-time highs set on the NASDAQ today. Just a couple minutes ago, we just closed at new all-time highs, right? And so NASDAQ is leading again. But the other indices are looking pretty strong as well. Dow Jones, of course, oversold over here. 5 consecutive red days. Now we're seeing a nice bounce. I believe this will continue higher. And so, but the important thing is that NASDAQ is starting to lead again. And when growth stocks are leading, people tend to be more risk on, right? People are risk off. They want to rotate into value stocks, dividends, bonds, and stuff like that, and hold the dollar. So the fact that people are going back into growth stocks and rotating back into tech stocks, dollar coming down, yields coming down a little bit, to me, that makes me very bullish that this will continue higher. So this is why the stock market is resilient, and these pullbacks once in a while are healthy for a healthy bull market, right? And these were great buy the dip opportunities. And of course, this is just entertainment and analysis. I'm not telling you that you have to buy. I'm not a financial advisor. This is not financial advice. You always have to make your own decisions. You are responsible for your own financial decisions. But if we just look at the historical chart, right, we can see that these are times where the risk reward of buying is a lot in your favor than it is to sell when there's a lot of fear. Because I guarantee you, on all these dips, and it's easy to forget when times move on and things are a lot better, but all of these dips that we've had in the past, especially this pandemic, it's always had bad news, and it always scares people. People are always talking about, oh, is this going to be the crash? Is this going to be a crash? But these are healthy pullbacks, so don't get scared, right? The markets are more resilient than most people think. And we're seeing that right now, a strong bounce, right? This caught a lot of people off guard. I think a lot of people thought, oh my God, inflation, interest rates are going to rise. We're going to see a plunge. No, markets just destroyed everybody's, or not everybody's, the bears. They destroyed their beliefs that this would continue down, right? And it's just incredible, shock back. But this is just a nice bounce and a strong hold of our Fibonacci support level. So what do we look for in the future? I believe that the fact that we are building such a strong base at this Fibonacci support level, I believe this will continue higher. And I know I'm super bullish. By the way, fear and greed 33, right? A lot of upside, a lot of room to the upside, right? The last time we were really high near 100 was before the March crash last year, the pandemic. But we're still there's so much room to the upside. So the fact that there's so much room to the upside, and we're at all-time highs, cultivating a strong base at this Fibonacci support level, gives me more belief that this can run up higher, right? Because the last time we were at near highs on the fear and greed, we were also at all-time highs, and then we saw a huge plunge. So to me, this shows that there's a lot more room to the upside. We're nowhere near very overbought or anything. Still a lot of room to run up higher, but just keep in mind that we do have a lot of consecutive monthly green candles, right? In the S&P, Dow 4, NASDAQ, right? Look, we had 6 consecutive green monthly candles. So having a red month is not a bad thing, right? We had 5 consecutive green monthly candles in S&P, followed by 2 red monthly candles, right? And now we have another 5. So we might have another red candle next month, or maybe the month after. But like I said, those aren't times to be fearful. And the media is going to come up with whatever reason they can find. And the funny thing is, sometimes when they can't come up with a reason, they'll actually explicitly say that nobody knows why it's crashing or whatever. But usually the market likes to, it'll come down and test these moving averages again. And that's just healthy. So again, I do expect this to hold, and I expect us to continue higher. And of course, in the future, there's going to be pullbacks again, like we had earlier this year, and like we've had in like the last 10 years, right? As I just showed you. So markets are resilient. That's the lesson of today. And these pullbacks should not be surprising. If you've been watching my videos on stocks or other assets, I've been saying many times that pulling back to these moving averages is very healthy, and you should not be surprised if it pulls back once in a while. And yeah, so in our next video, I'll definitely update you. Perhaps we'll be a lot higher. Maybe perhaps we'll pull back a little bit, trend along this Fibonacci support area. But I expect us to hold this as a strong base and push up higher going forward to the remainder of the year. And I'll definitely update you on the next video and see how this price action develops going forward. Thank you for watching this video. If you found it helpful, useful, or informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.